Welcome into my most popular video that I do every month, which is the stocks that I'm buying December 2022, and I'll go through the stocks that I've recently bought and why I'm buying them. I'll try spend a minute or two on them. As always though, there's quite a few stocks, so it won't be an in-depth video, just because if I did a in-depth look into all of these stocks, the video would end up being about 4 hours long. So I've got full videos on them somewhere on the channel, but this is just a kind of a quick 2-minute, 3-minute fire on why I'm buying them or if there's any new news on them. And I just do this series to keep up the transparency so you guys know what I'm buying, what I'm selling. I'm not hiding, I'm not disappearing off the YouTube channel, I'm not selling stocks out in the background. I'm keeping you guys up to date, especially right now in the bear market with all the moves that I'm making. And as always, I'll do a UK version in a few days time. But let's get started on the last stocks I'm buying in 2022. And let's take a look. And just to let you know, it is the last day on the Black Friday sale. So tonight this sale will be going off. It is a offer which I don't intend to offer again for a very long time, which is if you sign up to the Patreon annually, so if you go here, join annually, you'll get 2 months for free. And on there, that's where I post the real-time buy and sell alerts, so you don't have to wait to the end of the month. There's also 2 exclusive videos a week on there. And there's also a Discord on there with 600 members to talk to about stocks. And also that's the best way to get a hold of me as well. But let's get stuck into these stocks that I am buying and selling. So I did make a video about a week ago saying that I did sell 2 stocks. So I did sell 10% of a stake in Celsius for a very nice profit. The reason why I sold a 10% stake in Celsius was just adding on to the profit I've taken on off the table, just because since I was kind of buying it through the start of this year where we had a lot of pain, you know, the worst stock market start in 40 or 50 years it was. I was buying this stock and I've got the rewards a little bit, so I've been taking a bit of profit off the table. Not sold my position completely because I still think it could be a beast of a company. My only concern about this and why I was taking some profit off the table is just because the valuation, in my opinion, has got a little stretched. And also I think for the valuation to make sense, they need to have mass amounts of international expansion. And last time I checked, the international expansion was slowing down a little bit. And in fact, on the UK side of it, it was actually removed off the UK Amazon, the Celsius drink that is. So I messaged investor relations, they have not responded to 2 emails, and because I'm getting a bit of nervous vibes off them from that point of view, I took some profit off the table, which I think totally makes sense, but I'm still holding some shares. The other one was Dropbox. I sold out completely of my Dropbox position. I just thought that I'm a bit of a no man's ground with this one. I don't think it's overvalued. I don't think it's undervalued. I'm nowhere near to buy in. I think I could potentially use some of this cash to go buy other stocks. It's a stock that I have lost a bit of interest for over the last year, and because it's quite a smaller position now, I think it just makes sense for me to use that capital somewhere else. But if the valuation comes back to a decent level, I'll consider buying it. I also think it's worth pointing out that I think the growth will has been slowing down over the last few years, and it could continue to slow down a little bit going into 2023 as well. So that was also another factor that kind of played in here. So yeah, 2 stocks that were sold for some good amounts of profit, adding it to the long list of stocks that we've sold for profit on this YouTube channel. Absolutely amazing stuff there. So let's get on to the stocks that I'm actually buying. So obviously you guys know this was going to pop up on the list. DraftKings. DraftKings has had some strange drops over this last month, and that's why I've been buying up some shares. Some of it to do with downgrades, and for some reason the downgrades knock loads of market value off this. And I think there was also the part of accounts being hacked, and it was made a big deal, and it obviously never turned out to be a really big deal. And also you had I believe the earnings, when the earnings came out, there was a bit of a drop off on the earnings. So there's been a few opportunities to buy this stock at some crazy drops, and I took that up because I think this is going to be a massive, massive company in a massive growth area in the next few years. As you know, sports betting is only just starting to be allowed in the US, and you can see here that last year the industry generated 4.29 billion in revenue, and you can see here that through this year already it was up to 3.04 billion, and by 2025 Morgan Stanley expect it could go to 7 billion, and other people are actually expecting it could go to 6 to 10 billion. There's a big highlighter there where it says 10 billion for some reason. But yeah, you can see here that that's going to be a massive growth area in the next few years. I think DraftKings are going to take about 30% of that market share, and then that's obviously not including some of the GNOG platform that they'll have as well, which obviously will hopefully take a good fairer market share. New news with DraftKings. They actually announced a partnership with Churchill Downs. They're going to launch an app called DK Horse, and they're now going to be able to offer horse betting through Churchill Downs. I think this gives them access to about 19 states. Oh no, sorry, it says here 21 states. It should be up in May 2023. And Jason Robbins actually said that due to the structure of the agreement, we expect this new product offering to be immediately profitable as well, which is actually pretty impressive. So obviously this is great, giving DraftKings access to horse betting. Obviously the access through the Churchill Downs is great, and also shows the pulling power that DK has, that Churchill wanted to partner up with DK rather than Flutter or BetMGM or anyone like that. I think that's why that DraftKings does have that moat, because look at the pulling power that he managed to pull in. Tillman Ferretta chose DraftKings. It has that pulling power. The only thing that I was a bit unsure on is putting DK Horse as a separate app. I don't know if it would have been better to do that directly through the normal DraftKings app. I don't know. That was my only concern with it. But apart from that, everything else was pretty positive, and gives them access to another great area. So yeah, obviously good news there for DraftKings. I was surprised on the day actually when when the news came out for this, the stock wasn't actually up over 10%. This was a great partnership they announced. The next one was Google. So I'm trying to make Google into a top 3 position. I would not actually mind Google to be my biggest position. I'd be happy to hold that as my biggest position. Google, I think, is fantastic. Look at the moat, the products they offer, YouTube, the actual Google search platform. 20 times earnings. I still think this is cheap for a business like this. When you look at the financials of this company, you can see here, look at the profit it generates. Look at the previous growth is just absolutely insane. Just look at that for steady revenue growth, steady profit growth. And I think going forward, we'll only see that continue with this business. Sits on an amazing balance sheet as well. One of the best balance sheets in the world, which is obviously fantastic. And yeah, I think Google for the next 5 years is just set to, continue to perform, generate good amounts of profit. I think we'll see the profit doubling up in the next 5 years. I think we'll see the revenue double up in the next 5 years. And I think when you look at the share price at 20 times earnings for this business, yeah, I can see this being a very safe double up in the share price in the next 5 years. This is a big blue chip that I want to be holding massively. It reminds me of where the likes of Microsoft was in 2017 when I was loading up shares in that. Microsoft's a little bit of a richer valuation now, and puts me off buying it. But Google reminds me where Microsoft was 5 years ago. I think it's one of the disrespected big tech stocks. But when you look at the performance of it, the profit it does, the balance sheet of it, arguably the best one for me right now. Tesla. So I did start committing some shares into Tesla on this big drop that it's starting to have down here. It's nearly down over 40% now, or should I say 50% from its highs. So yeah, it's lost a lot of market cap at the moment, 59 times earnings. The reason why it's losing market cap, probably due to the Musk and Twitter situation. I generally think if it wasn't for Elon Musk and Twitter, I would generally say that I would see Tesla actually being probably around this 280 range. Worst case scenario, maybe 250. I generally think that if it wasn't for the Twitter situation, Tesla would be a lot higher right now. And I think that's causing a lot of pressure on the stock. But as I said previously, I don't think that'll have any long-term impact on Tesla. I still think Tesla has now got to a size where it's going to be very dominant for the next 5 years. I expect Tesla to double up in the next 5 years, and they keep moving forward. Even this year, we've got the semi-truck coming in, and that's going to be, we're starting to see the first deliveries of that happen. And as we go into 2023, all we're going to see is more and more of these deliveries happening. And then we also get the Cybertruck coming in to the back end of 2023, and that's going to be a major catalyst going into 2024. By then in 2024, we're probably going to get a new Gigafactory starting to move up into 2025. That's obviously going to drive more and more revenue going forward. So I think the next few years are very clear cut for Tesla. I think they should grow at good rates, drive profit forward. And I think at 59 times earnings, I'm going to start buying here. I think that there's potential that Tesla does go down to 170, 150, which I won't mind. That's why I'm slowly building, I'm giving myself a lot of room to slowly buy into this Tesla position. It's not a stock I want to be buying at, 300 or even 250, but I think when you get to that $200 range, when you start getting below that, for me, I think Tesla's quite a decent opportunity. So get some coverage into the EV space, which has got plenty of growth in the next few years. The next one's LoveSac. So this is a very small company. It's a 400 million market cap. Trades at 9 times earnings. I made a video which I think is probably my favorite video that I made this year, which is why I'm buying LoveSac. It's around 16 minutes long. I posted about a month ago, and it goes into detail on why I'm buying LoveSac. But overall, a quick summary of it, I think that when you look at it here, it's obviously a profitable company, 9 times earnings, growing at 45% year over year. I think the growth will slow down in the future, and we'll probably see this settle more towards like the 20% year over year growth. But I still think that's, for the value you're buying this at, is obviously fantastic. They do sofas which are easy to customize and also extend. So if you buy a sofa, you can go and buy more add-ons here and make them longer. You can change the covers, so you can see there's like this charcoaly black cover. You can easily change that to white. All you have to do is buy the covers, not a new sofa. So if you redecorate your room, it's very easy to do. And that also means that compared to a lot of the traditional furniture stores, you actually have, because of the flexibility and the changeability of these sofas, you have a customer basis that is 41% repeat customers, which is unheard of for a company in this sort of area. And that's actually why I buy it. I wouldn't normally be interested in the furniture shop, but because it's got 41% repeat customers, I'm like, okay, that's actually pretty impressive. And there's also a bit of a moat around it because they do have a few patents on their product, meaning it is hard to copy what they're doing. So also that gives them a bit more of a secure moat. So yeah, overall, big fan of this one. Like I said, if you want more detail, watch this 16-minute video that I did. PayPal, I am buying more PayPal. Same again, it's a big tech that I like. I won't mind getting this into a top 3 position. I do like Google more than PayPal. I'll just make you aware of that. But PayPal, I think, is on a good sale at the moment. $78. It's been absolutely killed since 2021. At the moment, the company is still growing growth at very good rates, although I would like it to get back to where it should be, which is more towards like 14-15% year over year growth. So we'll see if that happens, and I think that is good value if they do that. At the moment, profit has dropped down a little bit. You can see here they were nearly doing 5 billion in profit. It has dropped down to 2.4 billion, so that is why the times earnings does look a little bit high at the moment. But that's a lot of investments and changes and restructuring going on in the business. Going forward, we should see that start to come back. And actually, if you look at free cash flow, for example, you can see here they're still forecast to do around like 5-6 billion free cash flow, which would then put it, 15 times free cash flow, which isn't, I think, for PayPal is a pretty good opportunity. So yeah, I'm trying to build this one up quite a bit. Hims and hers. So this was a bit awkward for me because obviously the business is doing fantastic. We only have to look at the last quarter. And on the last quarter, I was like, they've had such a good year. Surely they can't continue to smash it. And they did. They smashed EPS, smashed revenue, moving to profitability, guidance was up, and the stock is still down here at $6. And I was like, I'm actually slightly up on this position at the moment. I've actually got a really good average on this one. And I was like, do I continue to buy now? And I actually thought, well, realistically, still at like $5-6, I think Hims is still a very good opportunity right now. For the company that it's growing at, moving at profitability, I thought, you know what, I don't want to disregard this position and stop buying it just because I'm at break even. I want to continue to buy it because I look at the performance of this stock and I look at the valuation. I'm really excited for this business in the next few years. As you guys know, I've covered it on the channel multiple times. So I did buy some more Hims. And that moves me on to my last stock, which is MercadoLibre. So MercadoLibre, this is same again, getting a little bit away from it. I always want to buy MercadoLibre in that $800 range. You can see here it's starting to push above that 900 range, which is a little bit frustrating. So hopefully it doesn't get too far away from me here. MercadoLibre is a company that has demolished Amazon in the e-commerce space in Latin America. So Amazon is not the number one player of e-commerce in Latin America. It is MercadoLibre. They are now the dominant player in there. Before Amazon could, developed the site, the logistics side of it, and they've taken control of like the likes of Brazil, Argentina, Chile, and are absolutely smashing it. Now the other thing as well is because e-commerce was slow to get adapted in Latin America, and that's probably why Amazon put it off for a long time. They also developed a fintech network as well, and that fintech network is actually growing really impressive as well. It's a bit like a PayPal in Latin America. So when you look at the recent earnings, you'll be able to see here, if we go off the 3 months period, you look at the total commerce revenues, you can see here it was growing at good rates, not as historic growth that they've had previously, but we know there's tough comps at the moment. They're still doing better than Amazon, but the big growth driver at the moment you see here is the total fintech revenues. They were nearly double in the last 3 months, and the thing is fintech could potentially overtake e-commerce as well, I would say, in the next 2 years for this platform. So you're getting a company here that is obviously the Amazon of Latin America, but you're also getting the PayPal as well. And the thing we know about the potential moving to fintech, what has the better margins, fintech or is it the e-commerce? It's fintech. So if fintech is going to come bigger than e-commerce for MercadoLibre, that means we're going to see MercadoLibre put more and more profitability in, and we're starting to see that actually happen this year with the profit side of it, as they've turned profitable and starting to ramp it up at very, very good rates. So yeah, I think to have the opportunity to have the Amazon of Latin America as well as the PayPal of Latin America, I'm loving this opportunity right now. So those are the stocks that I've been buying recently. I hope you enjoyed the video. Let me know in the comment section any stocks that you've been buying recently, and I'll see you all in a bit. Remember to smash the like button.